the paper is titled "The Anatomy of Cyber Risk," and it's co-authored with Helene Ray and Ahmed Tahoun, who are at LBS. Helene is a member of the faculty at the economics department, and Ahmed is at the accounting department. So just a quick overview of multimodal communication in my area. So text is becoming increasingly popular. So I'm focusing on several. So basically on the three subfields of the multimodal communication field: so text, voice, and video. And economists are notoriously slow in adopting state-of-the-art technology from other fields, but we're getting there. So text is the first frontier. It's quite established already in a lot of areas of empirical macro finance, asset pricing. So it's quite conventional. So it's not controversial to have a paper on using textual analysis. So it's also going to be part of the today's presentation. So when we wrote this paper, we started writing this paper 4 or 5 years ago, using textual analysis to measure cyber risk more accurately. And when we started writing it, it was people were laughing at us basically that this is what are you doing? Text plus cyber. Now, what do you know? Both the methodology and the topic are extremely useful to have. So we have presented it at the ECB already, Bank of Israel, American Finance Association, and we have been featured in The Economist and just yesterday in the Financial Times. So this is the topic, and also the methodology seem to be in demand. So the next frontier from the economics, from my field's perspective, is the use of voice. So there are some new papers which are coming out as we speak. The salient one is the voice of monetary policies, just to give you a flavor of what we're doing. So in that paper, the authors are codifying emotions and the tone of voice of the chairman or the chairwoman of the Federal Reserve Board. That's the central bank in the United States. And every quarter, the chairperson makes an announcement about setting the interest rates for the next quarter. But obviously, the tone of voice, you would think that the tone of voice and the way the announcement is carried would be picked up immediately by high-frequency traders who are, they're arbitrageurs. They trade in milliseconds, and any sort of indication of a dovish or a hawkish stance will be immediately priced in. And it turns out that the prior is exactly correct. Emotions can move markets, and it's going to be a very influential paper. I mean, now everyone is jumping on voice recognition technology, and in 5 years it's going to be mainstream. So the next frontier is what is likely to be is video. And there are several avenues that video analysis could be potentially path breaking and path setting in economics. So one example is that I've been talking a lot about it with other people in AI and machine learning. What does it mean to have human capital? I mean, economists always talk about physical capital, human capital. What does it mean to possess human capital? And it's some kind of immeasurable, intangible quality that some people call charisma, and something that potentially one could study is to establish the market price of charismatic people. And one could analyze performances of CEOs, politicians that the civilians have sort of, for some reason, agreed to be charismatic. Steve Jobs, Elon Musk, and is there something about their behavior that attracts people? And there is a huge demand for this, especially, I mean, during the COVID pandemic, there was a demand for consultants or in terms of who have the skill in terms of laying off people. So how do you fire people correctly? What kind of person is more trustworthy? Whom do people trust with delivering bad news? So, I mean, and there is a lot of psychological, clinical psychology, criminology, even subtexts. But in economics, there is nothing of that. I mean, we don't know anything about charisma and these intangibles. And I mean, in the immediate extension of the voice of monetary policy could be the face of economic policy, could facial expressions, hand gestures drive economic behavior. So, I mean, some of the silly example would be the Trump hand movements. We all have seen them. Do they make him look more trustworthy? What signal does it send to the viewers when you slam the table with a fist? Are people going to trust you more? But of course, if you don't codify this, it's going to be missed out. So it's not just information content which of announcement, but the way you deliver. And all that information is completely lost. And the bottom line is that in economics, we're slowly going to run out of data. I mean, big data is just data which is big. I mean, it's great, but we need new avenues, we need new directions, and I think multimodal information it has a huge potential arbitrage in my profession. So now just that was my sort of overview or introduction and my view on this topic, and now the actual paper. This was the cyber risk paper. So the motivation, I mean, for an expert audience, it's not necessary. So it's more. These slides usually we use for general audience presentation. So it's a very hot topic. Cyber risk is a very nuanced, very sensitive topic that you have to be very careful when studying, because you don't want to disclose, cybersecurity soft spots for potential criminals. So you have to analyze this topic, but also understand that this is occasionally a matter of national security. So there are some political context. It has peaked during the COVID-19 pandemic. It tracks the political cycle, and there is also obviously always some monetary theft or reputational losses involved. So lots of different angles. If you read through some of the supra-national institutions document their views, cyber is a source of systemic risk. It has been viewed as a source of systemic risk by the World Economic Forum and a lot of other institutions. Is it important if you're a source of systemic risk? Yes, because you're in the same category as a financial crisis or a financial risk. So that's how important cyber risk is nowadays. That we wouldn't be surprised if the next global financial crisis will be driven by a cyber attack. Let's put it this way. So what is the state of the art in terms of measurement? So this paper is about measurement, and the majority of people in industry and academia, they rely on reported cyber attacks. Of course, there are huge measurement problems with this approach, because there is no incentive to report being cyber attacked in a fully transparent, truthful way, because there are huge reputational costs for counterpart interactions for your customer base. You don't want your customers to know that you don't back up your files, or you lose completely the trust with your with the companies that you're dealing with. So the actual extent of the size of this risk factor could be potentially grossly underestimated. So what we do is we do something which is, which we call a new approach in economics, but for this audience, this is quite a rudimentary exercise. So we obtain the quasi universe of quarterly earnings calls. Every publicly listed firm that delivers quarterly announcements about its revenues holds a small press conference. It's a small audio and video conference, sometimes with the press, and investors can log in, can call in, and they listen to the company's announcement, to the spiel. And then they might ask questions. There usually is a Q&A session where investors or analyst, and I've participated in those sessions many times in my previous career. And so when we have analyzed, the full universe of what was available in the English language. So these are audio files transcribed into text, and we use textual analysis. Machine learning algorithm is a very strong word, so there's no actual learning sample here. So we're simply, for now, we're just identifying textual bigrams that we supply, that we scan through every bigram in every transcript of every firm or every quarter, and if any of the bigrams match the terms in our list, we assign the value of 1. So, and then we count up the occurrences of these bigrams in the earnings calls. When we have lots of countries, many years, many quarters of data, and a lot of publicly listed firms. So we analyze sentiment. So we have a large vocabulary of words that signify positive or negative attitude. So the simplest one would be bad, detrimental, or good, positive, delighted, and things like that. So, and we also categorize each discussion by topic. We can try to connotate every sort of paragraph within a 50-word limit. We try to identify if the company is not only talking about a cyber-related term, but also about an insurance or a legal-related terms. And then we create categories such as, for example, cyber insurance or cyber legal, or if a country name is spoken within a 50-word distance of a cyber risk term, then we're attributing that particular conversation to, say, cyber risk and North Korea, or cyber risk and US, and so that gives us a little bit more color on the underlying theme of the conversation. So a quick preview of the results. Globally, across time and across all countries, the fraction of all earnings calls that discuss cyber risk has increased 5-fold in 15 years, and it's currently at its historical peak. So the COVID-19 pandemic didn't help the cyber risk landscape. There is an explosion of COVID-related malware and ransomware attacks, and the trends are not looking that positive. Sentiment is also down. So not only it's self-explanatory. So not only do people talk a lot about cyber, but they worry more. So we call it the rise in the second moment. So the uncertainty underlying this risk factor is growing, because ex ante it's not obvious whether that is necessarily a negative thing, the rise of cyber risk. Because if you're a cyber risk insurance provider, that may be a good thing because you have a positive loading on the risk factor. So, but there are definitely more losers than winners from the rise of cyber, and that's something important that we documented. There is a lot of heterogeneity, and there is across geographies, shift from the US to Europe, Asia, UK. In terms of industries, there is a shift towards the financial sector. Some of the sort of more financy applications that I think are useful to briefly mention, and also it could be, you could envision how those could be applied to a different setting with a different type of multimodal information. So one can use these text-based cyber measures to predict actual cyber attacks. So we have a register of actual reported cyber attacks in the United States, and these are regulatory filings. So these are the attacks that have been reported and validated by authorities. And we do a pretty good job of actually predicting a real cyber attack. So this is very useful for policy. So this is one example where one can use leverage textual information for and construct a forward-looking, proactive sort of policy instrument. If our text-based measures spike up, then you better be ready and be proactive you should expect an actual cyber attack within the next 8 quarters. And we assign some numbers, we quantify it, and we assign probabilities, and etc. Another thing that we do is we run simple probit regressions at the firm level. We identify which firms are most are at risk, and you would, as you would expect, these are the large, the liquid firms, those who are usually listed, high share of intangible assets, and these are the types of firms that the cyber criminals would target to achieve the highest possible reward should their attack be successful. And we do also asset pricing regression. What is very interesting is that when we find that if a firm during its earnings call announcement reveals that it worries about cyber risk a lot, we see that immediately after within days after its announcement, stock returns fall. So there is a market price of cyber risk. And this high frequency event study approach is very easy to implement. So for publicly listed firms, for stock prices, for bond returns, for exchange rates, for all oil prices, you can study those dynamics at very high frequency, so at milliseconds. So if you envision any sort of public announcement, public event that you can analyze with textual information, with video information, with voice information, you can do before and after. You can look at the trend of returns before and after an announcement with a certain trigger. In this particular exercise, the trigger is the cyber text, but it could have been something else. This is a very general exercise that has been used for many decades. We find some contagion effects, and we do some other asset pricing results, but this is mostly to make sure that the paper gets published. But the most interesting part is sort of documenting these trends and understanding the drivers. So methodologically, it's not groundbreaking. But what we do, but it is it was a sort of new for this field that is quite new, and also we get a lot of from the policy side. I think that's it's good that we wrote this paper because we're talking now to the Cyber Policy Institute at Oxford and central banks. Already mentioned Israel. The folks there were extremely interested in understanding their country's exposure to certain risk factors, and I think we're going to share our algorithm with some people, it's not groundbreaking, these natural language processing algorithms, but for certain policymakers that's the state of the art. So what do we do in terms of the actual steps? So we have some. So in the first draft of the paper, this is the vocabulary that we had. Now we have more than 300 new terms. We have a revision which will come out in a few months. But as of now, in this draft, we have the following unigrams and bigrams: cyber security, cyber threat, data loss, data breach, worm, spyware, card fraud, email compromise. So we do a decent job of, we're covering all the usual suspect terms. In terms of the overall decomposition, the first two subcategories, cyber and data, they are by far the most important ones. So but there are some terms that we're still not capturing. So in the end, we'll have hundreds. But for now, we're doing decently well. We follow the Cyber Policy Initiative of the Carnegie Endowment to identify the terms. So that's what we follow. So in terms to identify the context of cyber risk discussions, we we create our own categories, that we just relied on our own understanding of the situation, of our own creativity, and some of the contextual categories that we came up with. Well, the country names is the first one. That's the obvious. People want to know where the cyber attacks come from, and it's very difficult. It turns out that this exercise caused us a lot of trouble, because it's very difficult to identify the source of the attacker, where the attackers come from. It's because by far the biggest country that gets flagged up is the United States, and then it's sort of hard to tell a story that US is a bigger, so because a lot of things are happening within the 50-word limit, and you as expert would know that. So we need to tighten up a little bit our definition of country names. But as a first pass, I will show you some graphs. They're quite fascinating. Then we have the monetary loss, we have the sentiment, positive, negative, and we have a few more. So when I show you the time series graphs, I think it will become more obvious. So these are the snippets of actual earnings calls. So this is how the PDFs, the text files, they actually look like. So this is the famous Equifax cyber attack, where one of the biggest ones in human history. Millions of people were affected. The FBI was involved, the Federal Trade Commission, and authorities in Canada, in United Kingdom were all involved. And this is the excerpt, just one particular paragraph that picked up some terms of interest. So difficult breach, data breach, incident opposed, and the total score for that particular quarter for Equifax in the third quarter of 2017, the cyber risk exposure has a number 10. It means 10 times Equifax mentioned. So it's a simple count. So it's a 10 cyber risk terms appear 10 times, uniquely. And the sentiment of -10 is one of the most negative ones in the whole sample. It means they used a lot of negative words. This is net sentiment, meaning that there were also sometimes positive words, which potentially had nothing to do with them. But on average, if you subtract positive minus negative sentiment words, the net sentiment score -10 means there was a lot of exposure to cyber, and also the exposure was highly negative. So it wasn't discussed in positive terms. And we do that obviously for every transcript, and then we have the full sort of panel data. So another example is Target. So 2014, a huge exposure and very negative sentiment. And I mean, those guys didn't hide anything. So they just completely laid out everything, and we didn't even have to do much. I mean, we hard check almost most unusual cases, but here it was very breach, slowdown, breach, challenging. So I mean, and it's a nice sort of validation check of the algorithm, because we know where that this outlier in terms of textual indices coincides with an actual enormous cyber attack. So our algorithm works, and it does pick up actual cyber attacks. So the hope is that we are capturing some economically, financially meaningful information. So it's not just gibberish. And then we have a couple more, but you get the picture. So just to show you the global cyber risk heat map. So we have counted cyber risk exposure for every firm for every quarter. So that took a lot of time, but we merged our textual data with financial balance sheets of firms. And we have 80 plus countries, so that took a bit of time. But here the heat map means it's an absolute terms. So the darker the color, the more cyber risk exposure in that particular year. So in 2010, very much a US centered problem. So very dark in US, a little bit in UK, a bit of in China. Fast forward 5 years, still the US dominates, a bit of Canada, UK, France, Germany, but mostly a developed world problem, the first world problem. But now in 2020, very much a global risk factor. We have South America, we have we have India, we have Australia, we have even the Scandinavian countries even. So, and these are absolute terms, so the scale hasn't been changed or anything. These are raw numbers, non-standardized, not unfiltered. So as of 2020, we were at the highest level, and the whole world seemingly is affected by the risk factor, as measured. These are as measured by textual information. So this is a slightly US. This for our US colleagues. So it's a breakdown by of US headquartered firms, where for those where we can identify the state. Sometimes for some firms, we can identify the city where the firm is headquartered, and we see the usual suspects. You have Illinois and Texas in the center, and then the two coasts, the East Coast and the West Coast, heavy concentration of capital. That's why heavy concentration of cyber attacks or cyber risk exposure. But in terms of sentiment, quite interesting. So California sentiment is very negative, meaning the Silicon Valley, and so the companies are talking a lot about cyber and they're worried about it. But if, for instance, if you look at Virginia, and District of Columbia is also part of it, it's not shown, but we'll lump it together with Virginia. It's heavy, it's very positive, right? So, and that was interesting. So it turns out a lot of cyber insurance firms and cybersecurity providers are headquartered in Virginia. So so there is a lot of geographical heterogeneity, and also the before mentioned discussion on the winners and losers. So there is interesting distributional consequences of the rise of cyber risk. So some regions, some companies, some individuals could be positively and negatively affected. And it's not just a matter of efficiency. We should minimize cyber risk as much as possible, but we should take into consideration the distributional impact. So this is the global cyber risk flow map. We know where firms are headquartered, and we also have the country names topic. So we're able to sort of draw this map where the origin of exposure is our country in the country names topic, and the destination is the headquarter of the firm. So our hope here is to basically say, well, who are the biggest sources of cyber risk for the United States, for the United Kingdom? Is this the usual suspects? Is it something different? Turns out it's in the bilateral flows. They follow GDP quite well. So the biggest source of cyber risk for US is actually the European Union. But we need to dig a little bit deeper here, because we're not controlling for sentiment. So this is a raw picture. So some US firms are mentioned, and the conversation could go as follows: we have been cyber attacked, we better call our friends from Germany and get better cyber risk insurance. Well, so how informative is this, right? But this is the first step, really. The flow maps are not existing. Bilateral source and origin data is not existent, and we really need to do a better job trying to identify who are the biggest sources of cyber risk. So this is the time series trend. So we have counted cyber risk terms for every firm, for every country, and we have standardized the quarterly average. So the standardized measure in the straight red line is on the left axis, and the dashed line is on the right vertical axis. So we see multifold increase. A number that is easy to interpret is the percent of calls with cyber risk exposure. So right now, 5% of all firms every quarter who have an English language earnings call transcript, they mention cyber risk at least once. So 10 years ago, that number was roughly 2% less. Now it's so it more than doubles every every 10 years. So in 2030, it's not unreasonable to be at 10%. So is it good? Is it bad? So what are the benchmarks? Well, to give you some flavor, 30% in the same sample, 30% of firms worry about political risk, and 20% of firms worry about climate change risk. But climate risk is an existential threat to humanity, and political risk is especially in US, it's so prevalent. So 5% is not completely low, so it's not too far away, and it's just we're just starting, and we're just beginning to get better data. So the trend is likely to we'll be able to capture more and more over time. And so see, these are some of the salient events of the WannaCry global cyber risk attack, the Petya attack. UK notoriously was heavily affected. So the NHS was attacked, and a lot of people were severely impacted. Our GP appointments were canceled. People were denied healthcare. So it can have not just financial, but also real life consumer welfare implications. You might argue, well, those attacks are very rare, but over the past 50 years, we also have had one global financial crisis. But a lot of attention is spent, a lot of papers have been written about banking crisis. But we have also had one or two global cyber attacks in the past 50 years, and there is a disproportionately less interest in those events than in financial markets, in financial crisis, for instance. So yeah, and it's better to be proactive and be ready for the next WannaCry ransomware attack, so the NHS systems will not be shut down again. And there is a lot more. There was an incident in Ukraine during the war that, and it has been, it's public knowledge, has been confirmed that Russian-linked sources shut down a power plant, and a few 100,000 Ukrainians were left without electricity for hours. Things could have been a lot worse, but these are very alarming signals. So this is something not to be joked with. So I will skip this. It's not particularly interesting. So just to show you some more pictures on the topical on the contextual flavor. So these are so this is the risk and uncertainty topic. And just to remind you, the way it works is we run a joint search. So we identify cyber bigrams and uncertainty related bigrams, and we lump them together if they are within a 50-word distance of each other. And so not only is cyber growing, the uncertainty surrounding cyber is growing. So people more and more are using such words as risk, chance, possibility, uncertainty in proximity to their dialogues involving cyber risk. So this is the rise of the second moment surrounding cyber, the dispersion or volatility about cyber. So this is net sentiment. This is the positive minus negative sentiment, and positive terms include good, strong, great, better, etc. And negative terms include decline, difficult, again, negative. And starting as a more or less sentiment neutral, this risk factor has become increasingly negative. In 2017, it peaked negatively. That local peak coincided with the global WannaCry cyber attack. And now we're in the second local negative peak, that's the COVID pandemic. So discussions of cyber more and more include monetary loss and insurance-related terms. So, and we have some, hard proof. We have some actual transcripts that show that investors are asking firms questions like, do you have cyber risk insurance? Who is going to cover the losses? In the case of Target, in the case of Maersk, there were actual questions, and cyber risk insurance, the market for cyber risk insurance is non-existent. And that's also not a good thing, because it's very hard to hedge this risk using financial instruments. but that just is just a side information. So this is the politics topic where we were trying to identify if cyber risk follows the US political cycle or other some interesting trends that we could correlate with other economic indices. So far, we haven't been able to. So there's no clear obvious spike during US elections and so forth. But we could do, maybe we could do a little bit more here. So the country names are increasingly more spoken. So so here you see the country names index is growing again after 2017. You starting with the WannaCry, there's always this change of trend, like structural shift. So companies are mentioning countries a lot more. So maybe there is less fear of trying to, sometimes it's very clear and obvious in certain situations, certain cyber, like in some of the transcripts by South Korean firms, the speakers were not hesitating. They would say explicitly, we think the source of the attack was X, country X. And but in some situations, we really have to ask our psychology friends to, because they can be a little bit vague, but we understandably they also don't want to say anything controversial, so it's not clear where this exercise eventually will go. So some of the global events are in our global event category. So the NotPetya, WannaCry, Cambridge Analytica, WikiLeaks. So it spikes around the WannaCry attack. So we managed to pick it up, but not much else. So maybe we will expand some terms here as well. So the crypto category is very interesting. So I will tell you why right now. So some of the terms we're including in this category are cryptography, blockchain, Bitcoin. Some of these coins are probably now out of circulation, so maybe I need to update it. But and then we have this index, the cyber crypto index, and if we correlate it with the price of Bitcoin, we find a positive and statistically significant correlation, which is not great. Which means that cyber criminal, Bitcoin is the cryptocurrency, is the currency of cyber criminals. All the salient ransomware attacks, they require payment in Bitcoin, if you want your data to be unlocked. So if your data is held hostage, the attacker will send a message on the screen, then you need to transfer 1 Bitcoin to a certain address, and if you don't, your data will be forever deleted. And psychologically, it's not surprising that if a cyber criminal monitors the price of crypto, and if the value goes up, then the expected return of successful cyber attacks increases. So in other words, even though we can't really measure cyber risk directly, we can use indirect inference, and we can identify proxies of cyber risk activity, and the price of crypto is one such possibility, that if crypto is rising in value, and if it continues to be used as a currency for ransomware attacks, so again that's also a proactive policy relevant sign. So we have a social media category, which we couldn't find because we thought social media companies are gold mines for cyber criminals, because they are just collecting so much user data that if you get your hands on it, then that could be useful for the cyber attackers. But so far we weren't able to correlate it with anything interesting, so we don't have a narrative yet about the social media. And finally, the final category that we have is the pandemic, so coronavirus, COVID, and it's also part of it. It's a separate validation check. We want to make sure exactly that we get zeros everywhere except for the COVID pandemic. So then we see the spike in 2020, and it should be there, and it should be zero. So it's another easy, quick way to validate the algorithm. So in the remaining 5 minutes or so, and then I will open the floor for questions. I will show you some decomposition by region, by industry, case of interest. So this is the regional structural change away from the United States and towards the UK, Europe, and basically the rest of the world. But the concentration is heavily in Europe and UK, and for UK it's very worrying because UK is almost as it has as high of an exposure as the whole Asian continent. So and after Brexit especially, it's something to keep in mind. So this is decomposition by industry. So I will walk you through some of the colors. It's not a perfect picture by any means. So we have mining here in the bottom, but we don't see it. It's a tiny percentage of industry. That's why. So then we have manufacturing, trade, IT, finance, real estate, services, and then education, health, and other. So the most industries that are most affected by cyber risk are IT, which is to be expected, the financial sectors, services, but services also include cyber security providers. So it's not just computer firms, but also say cyber consultants. So they're also that services. That's why we're very big. But if you look at the financial sector, it is increasingly more exposed. So in the past 7 years, it has exposure in the financial sector has risen quite a lot, and then that sort of opens the door for macroprudential discussions. Now it's not just a source of economic risk; it's a source of bank regulation risk. So now we have opened the door for new sort of new avenues for regulation, so we can bring more regulators on board and make the topic even more general interest. So in order to do that, we take a closer look at the financial sub-industries, trying to identify the biggest drivers of this expansion of risk exposure. So as of 2020, we don't see any monetary authorities, but the biggest financial subsectors that are affected by cyber risk are banks, and your typical depository financial institutions, non-banks, those are, and other intermediaries. So non-banks and other intermediaries are basically credit unions, mortgage companies. They give loans to individuals, but they cannot take deposits. Then broker dealers, insurance firms, and funds and trusts. So it's about 40% banks, 40% insurance companies, and the rest are broker dealers, basically. And this is very important to know. So there is huge demand for. So this is another example of why textual information is so useful here, is because we have identified that insurance firms are very heavily affected. And then that's a very dangerous sort of conclusion, because insurance companies are also the ones who are presumably going to provide cyber risk insurance. So it's not obvious how is it going to play out exactly, because simultaneously insurance companies are sitting on lots of private data, and they're also the providers of cyber risk insurance. What if an insurance provider gets cyber attacked? So who is going to be liable then? So there are lots of it's a web of interconnected questions, and it's going to take years for sort of regulators to regulate cyber risk systematically. But it's important to start somewhere, in our opinion. So I guess I will just show this table and I will conclude. So that's a very nice exercise that we're doing. So we're trying to predict future cyber attacks. On the left-hand side, we have a firm level indicator of reporting a cyber attack within 8 quarters in the future. So it's 0 and 1 indicator. And on the right-hand side, we have our indices: cyber exposure, cyber risk plus uncertainty, cyber risk plus positive sentiment, and so forth. And it's a logic model, so it's a nothing else. So with some controls and year and industry expect. So what basically the bottom line here is that the rise, an increase in tech-based exposure to cyber risk, as shown here, leads to an increase, statistically significant increase in the probability of actually being cyber attacked. So this number has policy significance, policy relevance. So this 8%, so a 1 standard deviation increase in text-based cyber risk exposure increases the likelihood of an attack by 8%. So these types of numbers are very useful and for the Bank of England and so for the ECB and so forth. So if one tracks our index and it increases by 1 standard deviation for a particular firm, you have an 8 percentage point increase in the likelihood of an attack in the next 8 quarters. And it's slightly more, it's slightly greater if the firm in question is also talking about insurance. So it worries about insurance and legal. So maybe there is some private information, some unreleased inside information that the firm knows about, that there is a risk of a cyber threat, but they haven't disclosed it yet. So that's why looking at earnings calls are useful. So so these are, I will skip some of them, firm level regressions, and I think I will conclude. So so we utilize the text of earnings calls to provide a better, more accurate measurement of cyber risk exposure. We find strong direct effects of cyber risk on stock market returns of affected firms. I haven't showed you those results, but it's just I think it's good to. I want to hear your questions as well. And so in the next steps, we want to quantify the aggregate welfare effects of cybercrime. So for potentially we'll have a theoretical model that will link to data. So it will be also quite innovative, something so a standard economic model linked to textual information. I think that would be very interesting. And policy implications, construction of early warnings indicators a little bit more rigorously, but that will be done in conjunction and together with our colleagues in policy and industry. So because we want to know what they want to hear, what they want to see. That's it. So that's all from me.